Brendan, welcome to the show.
Thanks for having me, Owen. Great to be here.
It's good to chat in the Raiz HQ.
Yeah.
Today we're going to talk about the business Raiz Invest. We're going to talk about the portfolios, how the business comes together, the past, the present, and the future. For folks who aren't aware of what the business is, it is ASX-listed, so we'll have an investor community that's listening, but also users that may already use the platform, maybe their friends and family that they could refer into the platform as well. Can you tell us a bit about the origin story of the business, where it came from, and then maybe even your involvement?
Yeah, perfect. I'll start from the very top and sort of in, when was it, February 2015, we had the opportunity to bring acorns from the US out to Australia, and we spent the next 10 months getting the business sort of what I call Australianised, the dollars and cents, nickels and dimes to dollars and cents, and check accounts to bank accounts and BSB. So we spent a lot of time. We spent 10 months getting the product right and fit for the Australian market. Did a lot of focus groups on saying, is it going to work? How are we going to target and how we're going to market? And on the 10th of February 2016, we launched to the Australian public, and it was a significant immediate success. You know, we built up the hype, we built up the presence of this business coming to Australia, because what it actually does is break down the barriers to investing. We sort of pioneered the concept of roundups. We pioneered at the micro investing, and what that means is fractionalizing ETFs on the ASX. So instead of spending, normally under the ASX trading policies or rules was you had to buy one whole unit, or back in the old days, minimum parcels of $500, etc. What we did is for as little as $5, you could get into a diverse portfolio of seven ETFs, ranging from conservative to an aggressive portfolio. So it was, to a certain extent, an instant success to break down those barriers to investing. And Raiz is built on two philosophies, and one of them is that small amounts consistently over time add up, and that's where we are today.
Yeah, and the platform has evolved quite considerably throughout that time, and I want to highlight some of the things that you guys do very uniquely in the Australian marketplace. You were, if I'm not mistaken, Brendan, you were here on at ground zero. Is that correct?
Day one, yep.
Yeah, and then when did you become CEO?
So when we were on day one, we had a product of sort of five portfolios, and that was it. Yep. Now what we offer is sort of 9 different portfolios, and we can talk about those later. But there's also a superannuation offering. There's also so that's if you're an employee, you can have your superannuation paid into a Raiz Invest super account. We have our Raiz Rewards program. So the product really developed, and as I said, we came out of the US under Acorns, and then in April of 2018 we changed the name to Raiz, and then in June of 28 we listed on the ASX under the ticker RZI, as we discussed. It's then not until September. So during that period, we sort of expanded, and one of the main reasons we went on the ASX was to raise some money. We raised $15 million on our initial listing to expand into Southeast Asia, and we had operations in Indonesia, Malaysia, sort of setting up in Thailand and Vietnam as well. But we've now closed those operations down to focus wholly and solely on the Australian business, and that's when I took over as sort of managing director in the September of 22. It was, so just over 2 years now.
It's since you've been running the business, there's been a lot of positive change behind the scenes. Obviously, things like, there's just corporate governance, there's legal, there's compliance, there's AFSL, there's so many things that go into running a platform of this scale. And, you get the team based here in Sydney. You're also a technology business, right? So there's so much that you do and so much you need to get right. But people, I think at the time of recording, this is the 19th of February, 2025, it seems that the investment community is starting to really pay attention. I think that would be fair to say.
Yeah.
Because we had in our notes when we last caught up, I had in my notes here, the company was 50 mil market cap, and just in the last few months, it's now 80 mil market cap. So things seem to be moving in the right direction. You mentioned super business, you mentioned roundups, all those types of things. How does the business actually make money?
Yeah, look, it's a very simple business, and I don't like the word simple because the underlying or the under the iceberg sort of thing, it is a very difficult business. And when you look at it we're ASX listed, so we have rules there. We're corporations law. We've got we own our own AFSL license, and you know what that means.
Yep.
And all those requirements. So there's a lot of regulatory bodies. We have a superannuation product that is, we have an external trustee, but that still falls under APRA. So we sort of get caught on a lot of umbrellas there. So it is a very complex business to make sure we get it right. And at the end of the day, it's what keeps me awake at night, because we are talking about retail as mum and dad. So, you open up a Raiz account for as little as $5. And, that's a big leap for a lot of people to get into the investing market instead of leaving it safely in a bank account that they're used to or they've had for the whole year, or their grandfather or boyfriend, tax accountant, or somebody would say, keep it in the bank account, keep it safe. Mum says, put it under the mattress. It's a big leap for people. So we make sure we do it right. And that's something what I pride myself on, but also the team on, delivering from a customer-centric operating model that we have. If you ask a question to our team, we sort of get back to you ASAP in the right way, in a complete manner. And I think we do that quite well. But having the way that we as a business makes money is we charge fees. So there's sort of 4 revenue streams. If your account balance is under 25,000 and you're in one of our standard portfolios, which range from conservative portfolio up to an aggressive or an emerald, which is our social responsible portfolio, we charge you $4.50 per month. So for $4.50 a month, you get as many deposits as you like, as many withdrawals as you like. But there's also what we call a switching or a rebalance. You might want to be, it's happened in the last month with the Trump 2.0 coming back. People are unsure what the market's going to do, so they might be in the aggressive portfolio, but they can switch it to a conservative portfolio whenever they want. So you can have as many deposits, as many withdrawals, and as many rebalances as you like. And as an example, since we've grown the product since back in the day, we have our plus portfolio. So you may want to say, I want to put $20 of my $100 into a BHP stock or a CBA stock. So it breaks down those barriers so people can get into those stocks where otherwise they couldn't do it. So the main source of our revenue at the moment is that maintenance fee. If you're in the Sapphire portfolio, which is quite unique, and we're one of the first managed investment schemes in the world to have Bitcoin, and I mean hardcore Bitcoin, not a derivative of or an ETF of, hardcore Bitcoin about 2020, into 5% of that allocated into a portfolio. If you're in that Sapphire portfolio, or we have our own Raiz Invest residential property fund that now has 13 properties in it. So if you go into the property portfolio, 30% of your portfolio will be allocated to the property fund. And then we have what we call our customised plus model, where that would be you open up the menu and there'll be 152 investment choices, being 102 ASX-listed stocks. We started off with the ASX 100, but few have come in and out. 48 ETFs, Bitcoin, or our property fund, so you can invest in. And if you're in that Sapphire property or plus, that's $5.50 a month.
That's an extra $1 a month.
$1 a month, yeah. So if you, because there is some more transaction costs based on both the Bitcoin, the property fund, and the share trading and the brokerage. But if you go over the 20 or 25,000, depending on what portfolio, we move it to more of an old traditional asset under management model, where we take 27.5 basis points of your account balance on a month per annum, but paid monthly. Yeah.
Okay. Yeah. I actually have the plus one.
Yeah. Nice.
Plus portfolio.
Nice.
Yeah. For the extra $1, I was like, yeah, sure, I'll buy some of my own stocks.
Well, it's interesting because what Raiz is trying to do, and I think we've achieved it very well, is we get people into the market with their training wheels on through our portfolios, and now they can give it a go, still in a safe environment. We deliberately don't have, and we've had conversations with the regulators, we don't want people putting their money into a specky stock on the ASX, so we've kept it to the ASX 100. So it can give them the freedom and the education by hands-on. What does it mean if I put a 10% allocation to BHP or a 10% to South32, or going into a different range of ETFs that aren't in the predefined portfolio? So it gives people that hands-on experience. And for a dollar extra a month, I think it's a very good lesson in life and education that people can get in the palm of their hands.
I speak to a lot of people that have like a considerable amount of money. So not just like a token, a few $100, but tens of thousands of dollars. I'd imagine you'd have some pretty big accounts as well, because I'll get to it in a sec, but you manage a lot of money now.
It is. It's the average account balance across the board, across all our sort of over 318,000 customers, the last reported number. And I must say there's a few things I really want to talk about, but we do have results next week. So we'll keep it quite light to the old 28th of January ASX release we had. So we had 318,000 customers there, and the average account balance across the board is now over 5,000. Go back a couple of years, it was sort of 2,000, 2.5. So what's very important, and we put it out in our last release, is that people are using the app. even no matter what's happening out there in the economy and the cost of living crisis, we had something like it was $57 million of net inflows. So that's money coming in, not deposits and withdrawals, but 57 net inflows in the calendar year 23. But calendar year 24, so the January to December last year, we had $183 million of net inflows.
Oh, wow.
That's a lot of money. It's a lot of money. So, and if you add up all that, where we're sitting today is just under $1.7 billion of funds under management.
What is the big step change? Like, why does it go, what's that, like 5-6x?
Yeah, it's I think it's an education process, and that's what we're trying to achieve. We learned some lessons back, I think it was 16, when we had Brexit in the February and Trump in the November. It was, right, what was our behaviour of our customers? Let's start listening to what they need and what they want. And it's important that, I said at the start that we built on two principles. The first one was small amounts over time, but the second one is, in the pace of life these days, we understand and we've watched and we've learnt how our customers can lean on technology to help them out. Everybody wants a bit more time back in their day, and that's where our automated features really come into it. Yeah. And then people, through the education of compounding, there's lots of examples out there saying, hey, if you've got a mortgage, if you pay it on a monthly basis, this is how much interest you'll pay, but if you pay it on a weekly basis, this is how much you'll save. People don't realise it's exactly the same on savings the other way around. Instead of saying, hey, I've got $100, I'm going to put it at the end of every month, put in a couple of dollars every day leading up to it, you'll get that compounding interest impact on that, which will grow. Yep. And we've spent a lot of time in messaging around our customers to make sure they understand that. So the automated features, no matter what the market's doing, I've been on panels, I've been in discussions, and I talked to some of my son's friends. No matter what the price is, you keep that $5 going in, because you might get 3 eggs instead of 2. When the market goes up, you get more. So it's breaking it down so people can understand it that way. And the technology's really helped. People understand, have access to the markets, but keep it going, because at the end of the day, at the push of a button, we say what we do on the tin. We want to make sure if you do need your money back, and we understand people need their money back, they can get it back within two to 5 working days. Yeah.
So, pardon me, there's kids accounts, there's plus accounts, there's super accounts. Obviously, the shift to super makes sense, but I'm curious, how does the property fund work?
We bought a business, Super Estate, about 3.5-4 years ago now, and what we liked about that business was the IP and the technology behind having, at the time, they were Australia's only residential superannuation offering. But what it does, we've used that IP and enhanced it from a constitution and a fund point of view. We go out and buy, or I'll start from the top. You download the app. You put in your bank account details, your name and address, and you say you want to go into the Property 30 fund. You put in $100. That Property 30 means 30% of your $100 will go into the property fund. That cash, that $30 will then go over to the property fund. And when there's enough cash in that, we go and buy residential properties. We buy residential properties that are let out, have a decent sort of gross return from a rental point of view. We don't go into big strata developments. We don't go into new builds. We make sure that it's a freestanding house that's got the potential to, and we look for the to be rented to somebody with significant time. It might be 12 months, 2 years, or 3 years, so that we can get that return on those properties, but also factoring in capital growth.
Do you use any debt or leverage in those?
No, we can, but we don't. We keep it very simple now. So as that property fund accrues cash, then we go out and if you look at it from a risk point of view, if the property market drops and everybody has a run on money, that's why we've said only 30%. But we've got the mechanisms and the liquidity in that fund that says that we always keep sort of anywhere from 15 to 20% cash to deal with the daily ins and outs.
Because that is very unique, Brendan. Like the ability to have an unlisted, illiquid asset, which is property, in something that people can trade and redeem their money in 2 to 4 days, right?
Oh, yeah. I think that's the unique selling point of it, because obviously with the price of housing in Australia and young people, I won't use the word millennials, but young people getting access to the property market, I think it's a big win, because they can understand how the process, because they'll be constantly updated. Hey, we've put in an offer where we've settled now, and things like that. They can understand how that whole property buying purchase process works. And I think that, again, it's just more education. The more education we can provide, or more hands-on experience will make a big difference.
So when you took over that business, I don't want to spend too long on this, but when you took over that business, how many properties did you have then versus now?
I think we had about 8 back then.
Oh, wow.
So there's been some positive inflows in it.
And how many do you have now?
I don't think we have it at 13. I don't think we do enough for awareness of that, and it's something that the marketing team's working on because it is such a unique property.
Yeah.
Investment opportunity. And I'd love to get it up to 60 or 70 houses.
Wow.
I think it's got the potential to get there.
So this is it's a really interesting I guess business overall, because when you took over as CEO, I know you had a lot of things that you wanted to do behind the scenes. And you know this better than everyone because we talk about it every now and again, is that you have the share price, which you can check every minute of every day.
Oh, yeah.
And it's like in my opinion, Brendan, it's like an improper way to gauge your performance as a CEO and as a team, because the change that you make today might not be like, there may be no benefit from that for 2 or 3 years, right? And so when you took over the business, I'm curious, like, what are the things you're starting to see momentum behind now versus when you took over? Like, what are some of the things that you've been working on to put the business into the shape it is today?
I think, you previously you mentioned the growth in the share price since we last had a conversation. I think now the market's starting to understand and see the benefit that we've done and that slower build, but there was a lot of cleanup. We cleaned up the Asian businesses that were cash loss. The fintech was at its peak back in the day. Then COVID hit, it sort of lost a bit of momentum. We had some cash flow concerns through the period because the last thing I wanted was raise money when the share price was so low. So it was sort of balancing the needs of the business, the team, the resources and our customers, but also saying, well, how do we capital manage that? And, someone like Alex, our CFO, he did that very well through that period. And now we're starting to come out of that. We've weathered the storm. We're started to get the right people in the right role. From a marketing point of view, we're putting the right messages in front of the right customers at the right time, and really sort of laser focused on getting those customers in the door, cleaned up the cash flow. You can see now we had to lodge our 4Cs or Appendix 4Cs for a couple of years over each quarter on the ASX, which is the cash flow statement. They've all turned the right way, and I think now high net worth individuals or retail investors out there, as well as some of the instos, are starting to pay attention to say, hey, as we said, there is $1.7 billion of fund under there. It's not a toy. It's a meaningful business. We have over 318,000 customers that are living and breathing with us every day. We would have made trades for over 100,000 Aussies today. There's not many platforms or brokers out there that would have done 100,000, but it's every day our customers are looking at it. Our customers are understanding market volatility. What does compounding mean? What is a dividend? I think there was we paid about $60 million worth of dividends to our customers last calendar year. I can guarantee you that a lot of them would have been the first time they've ever had access to or received a dividend. Now they know what a dividend is.
It seems like there's a lot of latent opportunity in the business. And by that I mean, like you say, like you've gone, I remember when I was looking at the company a few years ago, and it may have been like one of the first times we met, and we're looking at that because, if you're an analyst, you can do like a P times Q model, which effectively means what's like the average revenue per customer multiplied by how many customers, you got total revenue, right? But you can also do that in another way with funds management businesses where you're like, this is the average balance, this is the average fee, how much does that equate to in revenue? And the big dial there is that average balance is growing at the same time the number of customers are growing. So you get this power law in effect over time if it keeps going that way, right?
Well, that's exactly right. And that's what I think the business is achieving. And at the end of the day, the numbers are stacking up and backing us up because that's exactly what we're trying to achieve. People say, well, is it FUM or is it customers? And at the end of the day, it is customers because it's not a straight FUM equals your revenue. It is number of active customers that have a dollars amounts in their bank account that we then charge a fee for. So it's the number of active customers. And with that, and with the growth of the account balances over time, we will get them to that AUM fee, absolutely no doubt. And I've spoken to you before about it with our kids' product, and our superannuation products. I want that cradle to grave in financial journey involvement with individuals, and I think the product suite leads to that. And when we talk about what had to be done a few years ago, or where I wanted the business to go, or where the team wanted the business to go, was we make the right decisions in our product roadmap, because the last thing I want to do, and I've looked at it and I've watched it, and for a lot of competitors that they do something, then they have to unpick it and then go again, because something's got to, is it the chicken or the egg, which comes first? So we spend a lot of time and effort understanding what our customers want, what's the best to, because we know where we want to get to, but by just throwing products or just jamming innovation down there, it's not going to work, and it's expensive.
So you use this idea of moving up the value curve. What does that mean?
It's sort of going from, if you come into a customer comes in, and the typical customer will come in and join the conservative portfolio. Sort of 14 days later, they may turn on their automated features. So they've got to manually go and get round up, or yes, I'd like $10 lump sum one-off deposit here. 14 days to 20 days, they'll turn on their automation. Then maybe within 3 months, depending on the market and the volatility, they'll go up the risk curve. So they'll become an aggressive portfolio, or they'll then go into a sapphire portfolio. So the share of wallet that we're getting from them from a revenue point of view increases. So they were paying $4.50 a month, now they're paying $5.50 a month. It's then making sure that they're aware that something like Raiz Rewards is in there. And that's something we haven't spoken about, but that's a revenue driver for us, because it's a simple cashback program where you might shop at David Jones or Kmart, and whatever you spend, net percentage will come back into your investment account, not a point of sale discount. Because I know a lot of people out there would say, cool, I received a discount here, so they'll turn around to the next shop and spend it again. This is for savings by putting that cash back into your, like I got some travel insurance, so that actually popped up about 20 minutes ago on my phone saying that Covermore has reinvested in you. So it's coming from them, they've paid it, and it goes into my for savings, whereas if they put it into my bank account or off my credit card, I would go and spend it again. Yep. So there's a bit of a unique there, but it's getting people to make sure they're aware of that. And then there's the Raiz Super product. We want them in that. So we want to have the relationships with them to push them up the value curve. And then from a capital markets point of view or a company valuation point of view, it increases the lifetime value.
Yeah, that Raiz Rewards thing, the team and I use that to book like a lot of travel.
Oh, I love it.
Yeah,
love it. It's great.
Yeah, so it's like a little savings hack that we talk about on our finance podcast a lot, using that to book accommodation and have the money reinvested. And the rule in the business is whoever books the travel gets.
Hey, mate, I've never seen so many staff members want to book travel for anybody, or let alone Microsoft's a partner. So whenever we have a new start, I'll buy the computer. You used to hate doing that. Now they're like, I'll do it. So they get the reward.
Yeah, exactly. So I guess maybe it's a bit more like pie in the sky, but if we think about where the business could be in a few years, is there anything that's like if you were out there, like we're here in the office in Sydney and everyone's outside, just on the other side of the glass, if you were to go out there and give a really, I don't know, a Malone special, like a speech to the team and try and get them excited about one thing or a few things over the next few years, maybe it's the roadmap, maybe it's the business. Are there things on your horizon that you think the listeners and viewers and people just in the investment community should know about?
I think if I go out and speak to the staff now, and it's Wednesday, so we had our all hands team meeting this morning, and the chat and the conversation with each other is, wow, we've done well. We've had a few hamstrung moments over the last couple of years, but we've done well to do where we are. The opportunity's huge. We're only just touching the surface on where I believe we can get our active customers to. I've said at the AGM and to shareholders and investors that I expect us to get to 500,000 users. And we're sort of 318,000 now. So I think they get excited with opportunities, but then it's not as easy as putting a sign on the door saying, hey, come to us. We have to innovate. We have to get the message out there and continue to change. So there's a lot of things I love talking to the crew because it's all 8 different ages and, I'm quite old and I'm an accountant, but listening to what they would say or how they would take the product. And as I say to them, there's no wrong answer, there's no wrong suggestion, because someone over here might say something that's this good, but then someone over here will finish it. I give 20 ideas a week and they're all 3 to 4% value. But then someone's going, that's a good idea, but if we do it this way, and then they come back to me with 100% product option. So there's a lot of things, and I think as the customers are growing with us. I mean, if we spoke 8 years ago or 6-7 years ago, the majority of our cohort was in the 26 to 38. Say now they're the 30s to 42. So our customers are growing with us. Therefore, our product has to grow with them. And we do a lot of feedback. We have sort of a voting page of what investment opportunities individuals would like. And, one of them that we spoke about yesterday was a lot of customers say to us, hey, Raiz, you've done an awesome job in breaking down the barriers to investing, micro investing or fractionalisation of ETFs, and now you've gone into the Bitcoin. You can fractionalise that and get people into that from a FOMO point of view without hot wallets, cold wallets. So we've done it creatively but correctly. But it's also customers saying, well, the wealthy get access to these, is it VC, PE deals? How can you fractionalise or how can you democratise that for the everyday Australian? And it is funny that with the fund that we have a lot of those sort of houses coming to us saying, hey, can you give us capital? So we've got some plans for that sort of product coming out, which is still very early. I made some comments at the AGM around our white label solution because we think that's an opportunity. It's not necessarily about Raiz, it's about using the smart technology we have to help every Australian. And if they're going to come through someone else's channel, that's cool. But I still believe that it's a big part of financial education, financial literacy and inclusion.
Yeah, there's a lot of opportunity. And now that I would say that the harder, more laborious stuff has been done over the last few years, you can see that momentum shifting.
And I think, something like superannuation, that's a big topic. It always will be a big topic in Australia and in the community. We've done we've had a few SFTs. We've merged the super estate property fund into the Raiz Invest thing. We've changed administrators and trustees over the last couple of years. Now it is right. Let's knock this product really into shape.
Yeah,
customers will say to us, well, we look at it and we see people saying, I'm rolling in. I'll use an example, $50,000 exactly. And no one's got in their superannuations, no one's going to have $50,000 on the money to roll in no matter what day of the week it is. And so we speak to them and they'll say, I left 10 grand over here because of the insurance that I've had. So we know and we admit that our superannuation product does need a lot of work. And I think we can tailor it a lot better, as well as we've only got an accumulation phase. I want to go into the retirement phase as well.
Yeah. So I've only got two kind of questions for you now is, if you look at the progress the business has made over the last few years, now the business as a whole is about 80 mil market cap at the time of recording. If you could ask someone, or you could say to someone what they should focus on if they're an investor looking at the business, if they rock up to the next investor call and you're on the other end of it and you call for questions, what are the types of things that they should be looking at? How should they be assessing your performance as a business? What are the metrics you would tell them to focus on? Yeah,
so look, I've got a mate called Owen, and when I talk to Owen, he'll say, how's business? I said, look, all the key drivers are heading in the right direction, and that was the sort of the headline of our results last week. You look at our active customer numbers, we're getting some great traction now because we've spent the last, I won't say the whole 2 years on that, but we've definitely spent the last sort of 6 months to 8 months getting the systems right to get the right message to the right customer at the right time, and that's paying off. So all our key drivers are heading in the right direction. The operational cash flows there. We did a raise. We did a placement with State Street in August last year on our 4-year results. Which then sort of strengthened our balance sheet from a capital point of view. So I haven't got any concerns around capital management anymore. Well, I always do, but it's topping up. Always both in the office and at home. But it's all the metrics and growth drivers are heading the right, thumbs up. And when you break down the FUM, when we talk about it across our portfolios, total FUM was up 32% year on year. We had our super FUM up 33%. The plus, so that is people moving up that value curve, was up 89%. Something I love and I'm passionate about and it's very emotional for me is the kids investing portfolio. So that's up over 100% year on year.
So activating the existing community.
Exactly. Yeah, I think there's a lot there that we can do because there's a lot of customers that don't realise we have the kids product. And since we last chatted, but last month being January, we released our JARS product.
Yeah, that's cool.
And that's
really cool.
It's just amazing the take up on that. There's been the last reported number was over 18,000 accounts. 18,000 JARS opened up in about a 10 or 12 day period. But what's really sobering for me is to see what they're calling these calling their JARS, and it's things like haircut. People are using Raiz to save for a haircut. People are using Raiz. There's an account called Europe 2034. So from a growth driver and a longevity and a retention point of view, I should have that customer on that Raiz platform for the next 10 years. So when I talk to my mate Owen about, hey, Raiz is been knocked into good shape now. It is those strong growth drivers. We're delivering on what we say we always have. Yes, I think some of the cleanup from the Asia Pacific region or the Southeast Asian operations took longer than expected, but the important part is that we did it right. We did it respectfully. There's no issues and no concerns there. It has been closed correctly.
Yeah. And that's all available for folks in the updates that you give out. I would encourage anyone that's listening or watching to download the app. It's free to download. You can create an account. It's super easy to get started. You can link it to your bank account. I've got one to set up a kid's account for my sister. What I've noticed is that a lot of people use Raiz for all of the features that you mentioned, roundups, rewards, all those types of things. And they also have other investments that they do as well. It's not like one or the other. It's oftentimes both together, which is very unique. And I know a lot of grandparents use it as an education tool because it's really user-friendly and those types of things. So I would encourage anyone to check it out. And if you're an investor watching or listening, I would say go and read the latest quarterly. Go and listen to Brendan talk to investors because it's a really interesting business. I have no shares and I do not get paid anything to say any of that sort of stuff, just so anyone's aware. I guess like near-term focus, what can investors expect from you in 2025? Is it just more of the same? Is it that JARS account? Like what is on your mind? It
is, as I said, active customers is the important metric that we focus on day to day. So we want to continue the growth and the momentum that we have now, and that comes with innovation. Yep. So, I've made commitments to the team, in particular the team, and the customers that we will continue to innovate. We'll continue to tweak the product for a better user experience, for more timely reporting or whatever they need to make sure that we're delivering on what they need and what they want.
Yeah, cool. Well, Brendan, this has been a good bit of fun to do it in person and, on the record in the podcast. I really appreciate your time, mate.
Appreciate it. No, thanks for coming. Good to have you here at headquarters.
It's always good to be here. Thanks for watching this video on the RZI Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.